All right, today is Monday, June 9th, and going to get into the Euro USD, the Pound USD, and the USD Yen. Some interesting developments that I'm looking at right now. Actually, haven't been really paying too much attention to the markets. Um, as I said before last week, actually, I think it was the week before that I would be in London, and actually, I really loved it. It was a great experience to be there, and just Europe in general was well, the UK was actually pretty fun. But now I'm back checking out to see what's going on with the euro, the pound, and the yen, and of course I've been bullish on the euro USD and the pound USD. But of course, if we, from the long term perspective, you're always going to have, flows, right? You're going to have waves in, waves out. So even though on a long term perspective, on a monthly or quarterly chart, I'm still very much bullish on the euro USD, and I'm bearish on the dollar, the US dollar across the board. But we always want to take, if you see some, you know, some um, some developments to take advantage of on the opposite side on the pullback, then makes sense to try to get to capitalize on it. But we're going to start here on the euro USD, and so I took profits on my longs. I'm not mad about it, even though I do expect, like I just said, I expect us to hit 1.2 and above, and it's not going to be a straight line. But the reason why I did that is because there's a strong possibility. Now, when I go over the analysis across the different time frames, you'll see what I'm talking about. But clearly, I look for divergences, which give me a heads up, right? And in this case, there is divergence and there isn't, depending on how you want to look at it. The MACD, like let's pull up the MACD real quick. Oh, this is not it. Let's get this out. Actually, we'll use the RSI. That's fine. So you can see right over here, it's not necessarily an equal high. I guess if you want to, stretch it out, it can maybe be, an equal high. If I use hiking and she candles, yeah, it's kind of like a double top. So it depends on how you want to view it. Now, if you want to qualify that as a divergence, then there is some merit to that. It does look like it's topping out here. But if you go back to the regular candles, let's just say, for argument's sake, that yeah, okay, it's an equal high, right? But if you look down here, you can see there's divergence, right? So that's bearish. So that's qualifier number one. Now, what's qualifier number two? So for me, I'm huge. I mean, that's my bread and butter. My bread and butter is chart patterns. That's how I first started learning how to trade a very long time ago. So chart patterns to me always gives me a heads up on what's the strong possibility of what the market's going to do. Right in here, if you can see it, it's what do you call wow, my mind's blanking out. A bearish wedge. There you go, or rising wedge. So if we take a trend line here, we draw it here, and we take another trend line up here, you can see that along with that divergence we just talked about, that bearish divergence, just like that, it's looking a little tight up there, right? So, it looks like it's going to start dipping down. Now, that's part of the reason why I took, I took profit. And, how low can we go? So if I remove, we have two qualifiers here. If you're on the short side, you want to go short, this is not a bad area to go short, right? With your stops, maybe I would say about 100 pips away, 150 if you want to cancel out. a spike and then a long wick, right? Considering, Wednesday we have CPI numbers. I mean, for the remainder of the week, we have some good data coming out. We got core CPI on Wednesday. We have unemployment claims, and then on Friday we have consumer sentiment. Right, so all those things can make for fake moves, especially on Wednesday, which is CPI numbers. But from a purely technical perspective, if you're looking to, if you're looking at this on the short side, this may not be a bad place to go short, right? And if you're long, like I just said, a few times, that I took profit because there is, there's a risk here that this is going to drop down and, pretty much pull back. So if we remove this, one of my other favorite patterns is a broadening pattern. Now, if I start from down here, okay, we do this. And broadening patterns always start small at the bottom and expand up and diverge away from each other, right? If the price is going up, the trend line should go up as well, but diverge away from each other, right? Creating some kind of like expanding, kind of like an inverse wedge. The price is going down, the trend line should diverge away from each other, where the bottom trend line expands right out. So if we do that, that's the way it looks like. Now, this is a bearish pattern, and I just showed you the wedge here and a negative divergence, right? It's just like if I could have stayed long and say, okay, I'll start building positions, but it just doesn't make sense. The risk is there that this is going to pull back. If it doesn't pull back, so be it. Whatever, it doesn't matter. We'll just, just like a train comes and you miss that one, and then you just wait for the next one, right? The saying goes, if you miss the bus, you'll get the next one. So there's no need to try to, engage in some FOMO, right? Fear of missing out. But, the indications are there that we're going to get a pullback. So how deep will we pull back? If we do pull back, well, we got to use our Fibonacci's. Again, I use I used a Fibonacci tool, but I use Tesla numbers. Although sometimes I do use the traditional Fibonacci numbers, like excuse me, 1618 and so forth, right? But if I start from down here of the pattern and we take it all the way to the top, I can see us dipping below 1.12, right? Maybe in this area, 1.11, 1.12, somewhere here, extended to 50%, which is right above 1.09. So, or actually right below. It's actually, to be accurate, 1.08914. But somewhere here, right? And if it does that, I don't expect it to go lower than that. And I feel that once we get a dip here, which I'll show you in a second, we'll go to the weekly, you get a support, and then the market will continue its uptrend. So right now, this just looks bearish to me. So I didn't want to mess with it. The risk was there. There's no reason to, try to just guess. Just took a good amount of profit and just let it play out. Especially with next week, we have FOMC. That's going to be huge. So no reason to hold on to this. So let's just hide this for a second or remove it. And we'll go on to the weekly chart. Now, the weekly chart has that large expand. This is bullish, by the way. It's a large expanding pattern. And again, you see the two trend lines starting off small, but they're diverging away from each other. I expected this to pull back and start trending, strongly to the upside. So far, it's had some resistance here. It dipped all the way down here, but, you could see last week it made that wick. And now, so far the candle is green, but we're so early in the week that, anything can happen. So there is a strong possibility that this holds up as resistance, makes a large wick on the top, and then comes down. But I would expect, if I'm going to take all the way from the bottom to the top, I would expect maybe a 50% retracement. And like we just said, it's like right around 1.09, and then continue to the move to the upside. I don't know if maybe it wants to cover this gap, because there is a gap here. There's a gap here. There's a slight gap here, and just a tiny little gap here. Sometimes the gaps don't get covered at all, but that's, again, we look at the daily and we look at the weekly. That's a strong possibility that's going to cover the gap, right? And it's happened to me many times where I'm looking at a long-term chart on a monthly, and even though the direction or the analysis that I do on the direction overall is right, you have to account for the waves, right? The market's gonna, sometimes it's not gonna go straight up or straight down. You have to account for the pullbacks and and the natural waves that the market makes. So we're still around this resistance area, and if it does start pulling back, then yeah, this area will be resistance, and I expect us to dip below 1.12 for sure, and then go from there. So again, if you go to the monthly chart, this as well is a broadening pattern, right? Let me just clean it up just for a second right over here. And it's pushing higher, but again, since it's the monthly, this can easily just pull back, stay somewhere in the mid area of this pattern, and then gradually towards the third quarter, fourth quarter of the year, start going to the upside. And who knows, we could probably start trading above 1.2 into next year. So, but we'll just have to wait and see how this market's gonna develop for this week and next week, like I just said with the FOMC. And finally, the quarterly chart. We have this wedge, but we broke out. And if anybody trades chart patterns, the market tends to break out of a pattern, and then a lot of traders like to get in, or a confirmation that, okay, we're breaking out, I'm going to go long, and then the market pulls back and holds them onto a losing position. And then, traders start getting worried that, maybe they were wrong. It pulls back, and then it just starts gradually recovering, and it just causes a lot of frustration. So I wouldn't be, even though this is a longer time frame, I wouldn't be surprised if you see this big green candle breaking out of this wedge, and then it breaks out. It's already broken out, but it pulls back, and then this candle here starts finding some support, and then starts continuing higher for the next 2 or 3 quarters up ahead. So that's the analysis on the Euro USD. Again, like I said, on the daily, it just looks a little toppy. And if it drops, depending on how deep it's going to go, I use the markers as the Fibonacci levels. If I want to, I could use the pivot points, right? You can see this is the median level, just right below 1.1250. And if it drops further than that, you're looking at 1.0950. So, we'll have to see how this develops. So, if we look at the pound dollar, I already have it marked up slightly. You see how this wedge is marked up. Now, the divergence is a little bit more clear on the pound dollar. You can see this wedge here. And then if you go down, you can see how there's definitely divergence there. I'm not involved in the pound USD right now, but this definitely calls for a potential move to the downside to pull back. Again, like I said, bearish USD, but you're gonna have hiccups, ups and downs. If you go to the weekly, don't really see anything there. Monthly, we got that broadening bottom pattern where we found some support. The lower trend line is diverging away, and we have that solid resistance right above, in between 1.4 and 1.45. So I wouldn't be surprised, since it's a monthly, this pulls back, and then of course over time, like I just mentioned before in the Euro USD, that it'll start recovering and start trading above 1.4. If you go to a 3-month or quarterly chart, same thing. You can see how we've actually already broke out a few quarters ago on the folding wedge. Broke out, pulled back, and now it's starting to go, but it could still pull back significantly from a daily time frame perspective, considering this is a quarterly chart, it's still long-term bullish, but temporary can be bearish and pull back. So finally, let's take a look at the dollar yen. Now I have some things already marked up. Yeah, you can see this also looks like a broadening pattern. Let me draw the rest of it here. Right, you can see these two trend lines diverging. This one was a little tricky though, because if I look down here, if this was trading sub 140, I would have been like, wow, this is a clear divergence, right? You have this low right over here, and then it's trading lower, but the RSI is showing some strong divergence. In this case, this is not the case. This is not the case because the dollar yen hasn't made a lower low yet, so it doesn't really qualify. But if I go over to a weekly chart, and that's why I had this little box here, you can qualify this as a low and an equal low, and there's divergence there. So I wouldn't be surprised to see this pop even, and also there's a little gap right over here, and there's another gap over here that hasn't really been filled. I wouldn't be surprised to see dollar yen pop up towards 148, maybe even 150, extending it. I don't think it'll go that high, but I can certainly see 148, and then it will give up and roll over. Because again, like a long term, if I zoom out and I go on a monthly, look at this large broadening pattern that I have drawn out here. I'm still looking sub 140 the next maybe next 2 or 3 quarters, right? Maybe going into after the summer. But yeah, I can definitely see that happening. 140. What did I say? 148. Yeah, 148 extended, maybe 150, and creating a long wick before it gives out and finally starts trading lower. So yeah, that's the analysis that I have right now. This definitely looks like the dollar might rebound. If it doesn't, so be it. It doesn't, right? But from the way this is looking, I don't know if I really want to hold on as a bull, or I should say as a USD bear. I don't know if I want to hold on to this, and that's why I decided to just wait and see approach. Right, I took a good profit, and I'm just going to decide to just hold on, and let's see what happens when CPI numbers come out, and evaluate from there. So that's pretty much going to be it. I usually do my analysis videos on the weekends because I like to do it when the market's kind of closed, but sometimes we have some data coming out. I like to do some analysis, some quick analysis on the possibility, especially if I see some potential good setups. So that'll be it for this video. I hope you enjoyed it, and we'll see what happens going forward. So like always, I will see you in the next one, and good luck and trade safe.